Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that historically has been very popular and is still very popular, but their company is really struggling right now. So we're going to see what's going on with that. And that company is Intel. And as we can see over the last year, this stock is down over 40%. So they are really not doing that well. They're down even more over the 5-year chart, down around 47%. Completely underperforming the rest of the market. So we're going to see how Intel is ranking against their competitors like AMD and NVIDIA and IBM. We're going to figure out if this company is currently trading below intrinsic value per share. And then we're also going to look into some of the recent news that's come out surrounding this company. And right out of the gate, we can see right here, this article points out that in their most recent earnings report, Intel basically announced, not explicitly, but they basically announced that they were 3 years behind AMD and NVIDIA in terms of product development. And if I scroll down here, we can see they point out in particular, Intel didn't say above explicitly that they were behind, but they did discontinue one of their product lines, and their next series for their XPUs and GPUs will be in 2025, and so they might not have as much of a good value proposition in comparison to some of their competitors until 2023 and 2025. And if I scroll down here, they point out that AMD's up and coming product line will have CPU, GPU, and memory co-packaged. NVIDIA's will have CPU, GPU, memory co-packaged, and the ability to have CPU-only packages, whereas Intel's was supposed to have CPU, GPU, and memory co-packaged, and it still might, but maybe not by 2025. So this isn't really good news for Intel, obviously, especially in the tech industry. You want to remain competitive, but unfortunately it looks like AMD and NVIDIA are currently getting ahead of Intel, so it's not very good news for Intel or for Intel shareholders. Speaking of Intel shareholders, we can see right here they point out that Intel recently drastically cut their dividend payout to shareholders. In particular, right here, they point out that Intel might be a textbook example of an iconic American business in decline. They point out that AMD is currently stealing a lot of market share from Intel, and in their fourth quarter 2020 earnings results, it wasn't really that optimistic, mainly because of the weakness in personal computer demand right now in the market. And on top of that, including the fact that Intel stock is currently down over 40%, the historic 5% annual dividend yield that shareholders have been relying on and that they've been able to look forward to, unfortunately just got slashed, so they can't even really depend on this high dividend payout for this tech company. So really not that great, not very optimistic news for Intel stock here. And so we can see right here, this is their income statement comparing 2022 to 2021 and 2020. We can see that revenue for 2022 in total was $63 billion. That's down 20% year over year from $79 billion in 2021. Their gross margin for the fourth quarter of 2022 was 39.2%, down from 53% in 2021's fourth quarter. So not only did their revenues and their gross profit decrease, but their cost of sales actually increased, as we can see right here. So that's really not a good sign. On top of that, we can see that in terms of net income, they had around $8 billion worth of net income in the year for 2022, but that's down from almost $20 billion in 2021. So that's a decrease of around 60% in their net income. And actually, in the fourth quarter of 2022, they didn't even have net income. They had a net loss of $700 million, down 114% from $4.6 billion of net income in 2021. So really not very good news for Intel's income statement for 2022. Then right here, we can see their balance sheet. Their balance sheet is actually looking pretty healthy. We can see total assets have increased from $168 billion to $182 billion. and the majority of their business is financed by equity compared to liabilities. They have $103 billion worth of equity, and their retained earnings have increased year over year, so they do have more capital now to distribute to shareholders or to reinvest back into the company. And then lastly, right here, we can see their cash flow statement comparing 2022, 2021, and 2020. Historically speaking, over the last 3 years, we can see operating cash flow has been declining consistently year over year from $35 billion in 2020 to $29 billion in 2021 to now only $15 billion in 2022. And on top of that, we can see, unfortunately, they didn't repurchase any common stock in 2022. They only repurchased common stock in 2020 and 2021, and that has also been in decline. They repurchased $14 billion in 2020, $2.4 billion in 2021, and then they didn't repurchase any common stock in 2022. That being said, they have been paying out dividends to stockholders. They paid out around $5 to $6 billion worth of dividends for 2020, 2021, and 2022. But as we saw from this article, they only recently cut their dividend payout. So this payment to dividends to stockholders might actually decrease in their up-and-coming cash flow statements. And so right here, we can see their discounted cash flow model. Not gonna lie, this might not be the most reliable discounted cash flow model this time around, mainly because the estimates from Yahoo Finance were so conservative or so negative that it ended up producing a negative value for their estimated intrinsic value per share, mainly because currently, as of today making this video, Yahoo Finance estimated that Intel was going to grow at negative 25% over the next 5 years, which, I mean, according to those articles and the fact that they're cutting their dividend, obviously there isn't really very optimistic news for Intel in comparison to AMD and NVIDIA. Also, their free cash flow for their most recent full year was negative. They actually had more capital expenditures than operating cash flow, so their free cash flow came out to be negative $9.6 billion. At the moment, they have more debt on their balance sheet than they do cash. So when we net their cash against their debt, they actually have a negative position right here, a net debt position of $14 billion, and they have 4 billion shares outstanding. And so obviously that puts their intrinsic value estimate in the negatives, which obviously means that they are not trading below intrinsic value per share. And as a matter of fact, their stock price was trading at $51 per share at the start of the year, but now it's trading at $27, and even still, based on these estimates, they are not trading at a very good buying opportunity at the moment, mainly because of the fact that the future projections for Intel are really not that optimistic. And in terms of comparing them to their competitors here, we can see from a financial ratio perspective, Intel actually is not doing that bad in terms of gross profit margin. They're middling of the pack, above AMD, but below IBM. They have the highest net profit margin ahead of AMD and IBM, the highest return on assets, and they also have the best PE ratio. But that could be a negative, especially considering the fact that their two competitors have pretty high PE ratios. It could be that for their two competitors, shareholders and investors are pricing in the projected growth of those companies. And the reason why Intel's PE ratio is so low is because the same investors and shareholders are basically predicting that Intel is not going to grow at the same rate as AMD, IBM, and NVIDIA and some of their other competitors. That being said, in terms of dividend per share for the most recent full year, Intel came out to be around $1.46 per share. AMD doesn't pay out a dividend, and IBM's was over $6. So from a competitor analysis perspective, it looks like in terms of net profit margin and return on assets, Intel is the best. But in terms of everything else, it's questionable, mainly similar to this intrinsic value estimate over here, mainly because of the negative outlook on their future earnings expectations. And so lastly, I wanted to compare them to some of the companies we've looked at in prior videos. In terms of intrinsic value, obviously we saw that Intel was not trading below intrinsic value per share, not even close, so they didn't even make it onto the list. General Electric and Albertsons are still the only two companies on our list trading below intrinsic value per share. In terms of growth rate, Intel's growth rate was negative, so they didn't make it onto the growth rate table either. GE still has the highest at 44%, with Tesla's 18% coming in second place. In terms of gross profitability and net profitability, Intel is doing pretty good in comparison to the other companies that we've looked at before. They did make it onto the board here with a 42.31% gross profit margin, behind 3M's 43% and ahead of Netflix's 39%. Adobe still has the highest gross profit margin at 89%. Nobody's been able to take Adobe off of the #1 spot just yet. In terms of net profit margin, Intel had a 12.71% net profit margin, so they come in 9th place here, right ahead of Accenture. And then in terms of stock performance over the last 5 years, we saw that Intel is doing pretty abysmal, probably one of the worst 5-year stock charts we've seen out of any of the companies we've looked at thus far. Tesla still comes in #1 at a whopping 733%. Microsoft comes in second place at 191%, and Johnson is last place here with 17%. So in terms of comparing them to the other companies we've looked at, looks like Intel is doing okay in the profitability chart here, but in the tables for stock performance, growth rate, and intrinsic value, they didn't even make it onto the board just because of their pretty bad historical stock performance and their negative outlooks for their future earnings expectations. In terms of competitor analysis, they're not doing that bad, but again, the negative outlook for their future puts AMD, IBM, and NVIDIA probably at a more attractive investment at the moment. And then in terms of intrinsic value, they're definitely not trading below the estimated intrinsic value per share based on these estimates from Yahoo Finance. So I'm not too sure what to think of Intel right now. I would probably be placing my bets at the moment based on the information that I have available to myself today on AMD or NVIDIA. But let me know in the comments section down below what you guys think of Intel. It could potentially be a good buy right now just because of how much it's fallen over the last year. Let me know in the comments section down below what you guys think. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.